This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now, from the IARN studios in Des Moines, here's Riley.
Good day and welcome to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Riley Smith. Today is Wednesday, June 18th of 2025, and we are so glad you can join us for today's show. In today's episode of Ag Matters PM, I have my coverage from the Farmers for Free Trade event that was held in Swisher, Iowa at Cedar Ridge Distillery. They had a tariff town hall featuring some panelists that are leaders across the Iowa ag industry. I personally had the chance to visit with Chad Hart, an economist at Iowa State University, and Matt Willimack of the Iowa Soybean Association. We'll also have a check of the closing markets with Kenan Layden of agmarket.net. But first, I talk with Chad Hart of Iowa State University about the economic impacts that small farms are feeling from these tariffs. Farmers for Free Trade had you on the panel here to talk about the impact of tariffs on Iowa farmers. First off, let's talk about what the impact has already been so far on the farmers here in Iowa, especially at that small scale.
Well, that's the deal. As you're looking at, this Farmers for Free Trade event, what they looked at was specifically the tariffs we're already paying for. So looking at products we bring into the U.S., we're paying additional tariff on that. What we found is that if you compare April of 2024 to April of 2025, there's been about a $68 million increase in tariffs being paid by Iowa consumers as we bring product into Iowa. That's about a 300% jump year over year when you think about that. So we definitely are seeing costs already being built in the products that we bring in here to the state. One of the major challenges, though, is that we also export a lot of product outside the U.S., and that's a piece that's still missing when we think about the damages here, that we know what we're paying on what's coming in. We don't know fully what we're losing for the product that needs to leave.
Of course, a big thing with the product that needs to leave the U.S. right now is with these tariffs, doors wide open for Brazil to fill in that gap with cheaper grain. Not only the ability to make cheaper grain, to produce more grain, they have more flexibility in the amount of land that they can farm. Talk a little bit about the impact of Brazil on this scene, as not only are we potentially losing business, it's going somewhere else.
Well, that's the deal. I like to joke that when you're looking at a trade fight, the country that wins is the country that does not participate. So when we're looking here, for example, the fight between the U.S. and China, it's a country like Brazil that truly benefits because they have the ability to, as you say, expand production. They already have a trade relationship with China, and they produce a lot of the same goods that we produce here in the U.S. So that makes them a ready market to sort of replace us within the Chinese system. And that is a major challenge here, is that right now this tariff fight between the U.S. and China is leading to higher costs for both, while Brazil gets to sit on the outside and benefit from those changes.
So then when it comes to a trade strategy, obviously we needed some sort of change to get these deals maybe a little bit more fair. Not that they were super terrible to start with. When it comes to the changes, or I guess the strategy that could be taken to maybe ease the impact on agriculture, what are some of the ways that maybe could help that haven't been considered?
Well, I believe the biggest challenge is that we basically started this off as trying to adjust the entire globe at the same time, where trade and tariff negotiations are much more of a country-by-country agreement that you reach. And so you want to do it more, let's call it methodically, than what we've been doing. The challenge right now, and I think it's a challenge the president has seen faces, is trying to negotiate with 90 other countries at the same time. You just can't find enough negotiators. Where if, on the other hand, you're taking a very systematic approach, looking at where the biggest trade problems are and working specifically with that individual country, you're much more likely to get effective change in trade policy.
Now, looking at the small scale with the Iowa family farm, these big global things, way out of their control. They're just dealing with the consequences of it. I know we lost a good amount of family farms in the first Trump administration from tariff situations. What's the best way to maybe kind of weather the storm through this? Or is there even a way to weather a storm in a situation like this?
Well, arguably there is a way. And you can think of the tariff issues we're having are basically just creating some economic damage to the farm as we're looking now. But farmers over time, if you've been a farmer for a while, you have figured out how to weather some financial storms. So it is reminding ourselves of, okay, how do we control our cost? How do we try to capture the best price that we can at the time that we can? And basically work through, let's call it the rough financials of the business to keep ourselves going. Recognizing that we can't control what prices are in the marketplace, that we can't control what costs of, for example, potash is going to come into the country from. But what we can do is look and better assess our ability to grow products within that market and try to succeed from there.
Chad, lots of great information today for anyone who would like to stay in touch with Iowa State and continue to see that economic analysis. How can they do that?
Probably the easiest thing is, I like to joke, go to Google. Google knows all, sees all. And we have a site called the Ag Decision Maker, where we publish a monthly newsletter, but we also publish a lot of fact sheet and tools that as agricultural policy changes, that we try to provide as much information as we possibly can on that website in an updated basis.
Farmers aren't just feeling economic impacts, though. As I talked with Matt Willimack of the Iowa Soybean Association, many farmers are experiencing a heavy mental health burden as well. All right, we're talking with Matt Willimack of the Iowa Soybean Association. We're here at Cedar Ridge Distillery near Swisher, Iowa. And Matt, great panel discussion today on the impact of tariffs on farmers. A lot of us are talking about the economic impact that everybody's going through, but on top of that, you alluded to this a bit towards the end of the panel, is there's a mental health impact on those farmers. There's a lot of stress, and it's completely out of their hands, so you just have to deal with it. So first off, what's some of the impact that you've seen in your area on just the added stress that these tariffs are causing?
Well, it starts with, the ability to make money. Farming, to all these farmers, that's their livelihood. That's how they go to work every day and work it's not a 9-to-5 job. They take it home at night. They wake up first thing in the morning and they're going to work. So, you think about, if you don't have a way to make money, or your livelihood goes away, or it becomes more difficult, I would say anybody's going to have that stress in their life of, how do you pay for the groceries every week, or how do you pay for your home mortgage or whatever. But so those stresses start to mount up, and depending on the operation, I would say smaller operations maybe feel it first. Young beginning farmers that maybe don't have the capital that it takes to really start an operation, they maybe feel it first, but I think it's felt up and down the board.
And I know I was just recently at an Iowa Farmers Union event where there was a small family farm. Well, he's a former farmer now. He mentioned last year, with not only tariffs but just machinery costs as well, he's not able to keep farming anymore. Right. And they lost, a 5-generation farming operation to these economic impacts. But like you mentioned, it's not just a job that you're losing. I mean, it's a way of life. You might be losing the home you live in as well.
Right.
So it's just kind of a big impact that I think a lot of people don't really see.
I would agree. I think people don't realize, you go to the grocery store and you buy your food, but, you don't always know where it's coming from. And I've been to events in the past where, young kids, when they're asked, where does your milk come from? They just say the grocery store. They don't realize it comes from a milk cow. So a lot of people, they say the farther you get removed from the farm generationally, the less you know about where your food comes from. And there's nothing truer than that. So, some of these folks that have been removed from the farm for 4, 5, 6 generations, they take it for granted. And here in the U.S., we have one of the safest and one of the cheapest food sources in the world. And everybody, I shouldn't say everybody, it is sometimes taken for granted.
And I know you mentioned as well during the panel of the tariff strategy and how it's a bit aggressive towards the negotiation. And something I enjoyed that you mentioned was it doesn't feel like an Iowa nice strategy. And, of course, we can speculate all we want on what we think would work for a strategy, but it is something to think about that perhaps a different approach would maybe save the livelihoods of these farmers a little bit better.
Yeah, potentially. And I'm not going to sit here and say that what the administration is doing doesn't need to be done. I was more alluding to the fact that they are taking a harsh and very black and white approach to it. And maybe there's a gray area in between that maybe makes more sense especially with some countries. I mean, China being our largest customer of many goods, arguably maybe that needs a hard approach. I don't know, but there's been a hard and fast approach with across the board, which maybe isn't the right approach for everybody.
Right, and we know that some things did need to change.
Absolutely.
And it's just the way that they needed to change is something that I think we'll always be thinking about moving forward. And of course, it's just good to highlight as well. We just had World Mental Health Month to make sure that those farmers, not only, if they're going through that struggle, they do have someone out there that they can talk to. There's always a neighbor out there to visit.
Absolutely. And if you know of a farmer that you maybe haven't seen in a handful of days, never again going back to being Iowa nice, go knock on a door and make sure somebody's doing okay.
And that concludes my coverage of the Farmers for Free Trade Tariff Town Hall that was held in Swisher, Iowa at the Cedar Ridge Distillery. You can find my coverage and more detail online at iowaagnet.com. We'll take a look at the closing markets next, but first, here's a word from our sponsor, the Iowa Soybean Association and the Soy Checkoff. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Welcome back to Ag Matters PM on the Iowa Agribusiness Radio Network, and it's time now to talk with Kenan Layden of agmarket.net for our closing market analysis. Kenan, what have we seen going on in the grain markets today?
Wheat having a breakout session was probably the story of today. The hard red winter and the soft winter wheat contracts at Chicago and Kansas City were up over 20 cents. Minneapolis was lagging slightly behind, but Minneapolis had been trading stronger than the other two contracts. Some possible reasons for that is weather down in those winter wheat regions. A lot of reports coming from there are talking about wet, slow harvest, poor quality wheat, and just some unknowns there with the wheat and the yields. It was expected to be a big crop, and it might still be a big crop at lower quality. Currently, it's dry in Canada and some of the large spring wheat producing regions. They are forecasted for rain over the weekend, I think about 1 to 2 inches. So we'll see if that weather run verifies. And then you have the more macro news with the Iranian, Israel, Russia, Ukraine. The trade had been discounting that. It may still be, and this could be more a fundamental play with the funds being very short. Corn followed along for the day. The heat dome is something that I've seen mentioned in the news. It's supposed to be hot. Someone had mentioned that Chicago, back when everything was pit traded, if Chicago had a 100-degree forecast for 4 days, markets would be up. And they were today, which is more, maybe brings it back to some of the times when local weather and backyarditis played more into what people traded. And soybeans were pretty flat on the day, but have had a good run since that RDO announcement.
And I know with the wheat markets, obviously here in Iowa, really not much wheat production going on, but those wheat markets still play a huge factor with those corn and soybean prices. Obviously, when you see a big run like this in the wheat markets, it has a direct relationship to what the corn and soybean prices will do kind of in reaction to that, right?
Yeah, wheat was cheap enough with basis. It was cheaper than corn in some places. So buy that to feed to your livestock. It's corn, wheat was just really low price, which it's hard if it's working as a competitor for livestock feed use in that against corn. It lessens that corn demand for livestock feed and that usage. So it's good to see that complex moving up. Those feed grains have been kind of the dog here so far this year, I guess. So far in recent trade last couple months. So it's good to see them have some positive news and price action today.
Now, obviously, you mentioned the weather earlier as well, having an impact on the market prices right now for all of those grain commodities. Of course, at the end of this month, we're going to have some big USDA reports that we'll be taking the weather into account there. So far, what are we projected to see from the USDA on that?
Oh, I haven't read any trade guesses on the prospective planting reports for that June one, but the last one that came out in March, which is really early, and a lot of people don't know what they planned, had that really big corn number, that over 95 million acres, with soybeans being lower. There's some talk of maybe some of this wet weather related stuff being switched from corn to soybeans. It's always hard to plant 96 million acres of corn. Plus, everything has to go right within those planting windows for insurance dates. So I'm sure the trade will be looking for that balance between corn and soybeans there. And it's probably anyone's guess if the USDA is going to throw a monkey wrench or just stay status quo and not give us any surprises. It is a report known for big surprises. So that will be a very important report for setting some of the tones of these markets here moving throughout the rest of the summer into corn pollination.
Then moving on to the livestock side of things, how are cattle and hogs trading today? I know cattle kind of had a down day yesterday.
Yeah, they opened up lower. Cattle complex opened up lower. And it was able to, sustain some gains into the end of the day, which is good to see it bounce back after the really large break yesterday, especially in those feeders. I guess both complexes, hogs and cattle, probably going to see some volatile trading continue here with big up days, big down days, just because funds and managed money are so long, both of those. I think feeder cattle, 3 out of the last 4 weeks have been record longs in those contracts. So any adjustment in a more narrowly traded contract, especially like feeder cattle, can really throw some volatility in there. I know yesterday was kind of blamed on some of the ice raids and maybe some rumors of feeder cattle from Mexico, but the market doesn't go up every day. So it's good to see it gain some footing today. Some of the last corrections in feeder cattle, they were $20 moves down. We had that April 4th tariff situation, which sent it down to the 50-day moving average on the chart. There was some one time before where it also moved down to there, had probably a $15 to $20 break, and this break didn't even get that far. So it is a market that is still uptrending. It's still very strong. As most of your listeners know, the fundamentals of the cattle market are still strong. Cattle on feed comes out on Friday, and some of the numbers on there are calling for a bullish report. I'd remind your listeners that that data is current as of June 1st. And so market may have already priced some of the information we'll be seeing on that Friday, but the numbers are projected to be bullish. Placements are very low. Again, on feed is about the same as last year, but the placement numbers are like 94% of last year, which had a higher, 104 placement last year. And so good news, Mexican border has been shut down. There has been probably some heifer retention taking place. So to see those numbers be bigger would be a surprise at this point. Bigger than, seeing them be like 100 plus would be kind of something that the trade wouldn't expect. But, it's fundamentally herd building and lack of imports into the United States are probably still fundamentally strong. Watching cash here and seeing how that behaves. Cash has been the leader in that cattle complex. So it'll be interesting to see if the box value and that feeder cattle index and those live values can, keep rebound to where they were last week. They've been a little weaker into the week this week. So besides box beef, which, was up pretty big here this week again. So, but yeah, it'll be an interesting thing to watch develop here over the next week and see if some of that cash can continue to be very strong and lead the way in the cattle complex.
And again, like you're mentioning right there, yes, we might see those volatility on the prices and there's a lot of action there, but feeders especially are still at historic $300 levels. So it's not like the market is necessarily hurting super bad right now.
No, but we are at levels that are very profitable, and everyone remembers what happened in that 14-15 where they just kind of fell off a cliff. This cattle rally has been very much different than that one so far. We can sustain higher prices for longer, but it's always important to remember there are black swan events we can't predict, and there is political unrest and in the Middle East and other regions. So having some type of hedging plan is probably always a good, or price protection plan is probably important at some of these high, lofty levels with huge managed money positions and the volatility. I guess when the cattle market breaks, some people might see it coming, but most of us will probably be something that we can't predict.
All right, Kenan, lots of great information today. For anyone who would like to get in touch with agmarket.net and find more marketing information, how can they do that?
Yeah, check us out on the web at agmarket.net and find a broker in your area and sign up for some of our market information.
All right, Kenan, thanks again for your time as always, and we'll talk to you again soon.
Thanks, Riley. That
again was Kenan Layden of agmarket.net. We'll take a look at how the numbers close through the market window at iowaagnet.com.
July corn up 2 even at 4.33 1/2. July soybeans up 3/4 cent at 10.74 3/4. July soybean meal down 20 cents at 2.8490. Soybean oil down 2 cents at 54.77. Chicago wheat up 25 1/4 at 5.74 1/4. Kansas City hard red wheat up 23 1/2 at 5.71 1/4. Minneapolis spring wheat up 15 1/2 at 6.46 1/4. July oats down 7 3/4 at 3.63 1/4. On the Merc, August live cattle up $1.02 at 2.1167. August feeders up 82 at 3.0417. July lean hogs up 52 cents at 1.1217. Pork cutout up 3.90 at 1.21 even, and July class 3 milk down 28 cents at 17.68.
That's been a check of the closing markets here on Ag Matters PM, and that also brings us to the end of today's show. You can find all of our content on our website at iowaagnet.com. Also follow us on social media at Facebook, X, LinkedIn, and TikTok. You can find our video content as well as previous episodes of AM PM on our YouTube channel. Make sure you subscribe and hit the notification bell to see when those videos go live. Don't forget as well our free morning, midday, and closing market podcast, as well as the Iowa Ag Matters podcast and Pods of Potential. Find those on your favorite podcasting service at Apple, Amazon, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of the IARN broadcast crew, thanks for watching. This has been Ag Matters PM.